The theory of the yen carry trade as an important indicator was developed from how Dennis Gartman of the Gartman letter described in his newsletters what the carry trade was. Basically, Mr. Gartman said the yen carry trade was the world thermometer for risk. In the yen carry trade, yen are borrowed at a very low interest rate, and the proceeds are taken in euros. Those proceeds are then invested in the market and risk is taken. As these large traders decrease their yen carry positions, they are not willing to accept the risk and the markets fall. When the yen carry trade was first looked at as an indicator for ZoneTraderPro, it was done using a free forex feed and looking at a 15-minute bar, similar to the chart on the left. If the 15-minute bar was 15 to 25 pips wide, that was considered a normal bar and trades could be taken in both directions. As the yen-euro price increases, the yen is weakening and the S&P should increase. You'll notice that from 0.2 to 0.3. As the euro-yen price decreases, the yen is strengthening and the S&P should fall. You'll notice that from 0.1 to 0.2. On a 15-minute bar, if the yen was weakening over 30 pips, the trend was very strong and the odds of a short trade working would be greatly decreased. On a 15-minute bar, if the yen was strengthening over 30 pips, the trend was very strong and the odds of a long trade working would be greatly decreased. If the news causing the strengthening of the yen was really bad, as you'll notice on the chart, on this chart, and the index moved over one big number or more in 30 minutes or less, you can expect illiquidity volatility, which can easily be identified by the color bars with ZoneTraderPro. At this point, all trades due to the illiquidity volatility have an increased risk of failure. You'll notice on April 6th, the yen lost over 1.5 points in its value. As it did so, notice the extreme volatility of the moves. The S&P losing over 20 points, gaining 17 or 18 of those points back, and then losing another 15 points down to the lows here. It's this volatility, illiquidity volatility, that is extremely dangerous to trade and should be avoided. The volatility was caused by these very large bars. This bar was approximately 50 pips. This bar was approximately another 50 pips. And the money coming out of the market then caused the volatility that you see on the chart. Something very interesting happened though when the yen carry trade theory was further refined when the ZoneTraderPro system was put on the yen charts. As you can see from these charts, the Forex market also responds in a similar manner to the zones. The same ZoneTraderPro concepts are used. When the yen finds support, so does the S&P. When the yen finds resistance, so does the S&P. When strong trends develop, you'll want to be trading in the direction of that trend. Now let us look at two charts with the ZoneTraderPro system on both the yen carry trade and the ES. The ES trades to trend support and the euro-yen trades to intermediate resistance. From that point, what we see normal profit taking from 0.1 to 0.2. As the yen finds support, so does the ES. At this point, the long trade can be initiated. From 0.2 to 3, both the ES and the yen establish a long bullish trend. From 0.3 to 4, the yen makes a higher high and the ES hits strong trend resistance. At 0.5, we see the reversal in the ZoneTraderPro system typically occurring from where it should, which is minor support. At that same point, the yen is also finding minor support. From there, the ES moves to trend, and so does the yen. At point 7, the yen attempts to match its previous high, which it does, and then starts to sell off. At this point, when you see that the yen is unable to take out the previous high, you can, at that point, look to take your long trade here off, as the yen is going to go back and find support, which it does at point 8. Now, the ZoneTraderPro system had to trade to minor support to give you that strong buy from this point right here. However, as the yen was in its support, this is one or two ticks from this low of 1361 when the market reverses and goes up to 0.9. Again, 0.9 is about 4 ticks away from where the yen should find resistance. It does. And the ES at that same time also finds resistance. From 0.9 to 10, we see a pullback, which is typical profit taking, and the trend trade then resumes. The ES finds resistance. I want to make one very interesting comment about what happens at point 11. What you're going to see is at point 11, the market does pull back with some profit taking from here to here. However, as it's done that, what is even more interesting is that the yen from point 11 to trend resistance still has over 10 pips to go before it reaches trend resistance. What is interesting is, as you notice on this bar here, as the ES is at minor support, you'll notice the leading quality of the yen. The yen is already traded up and is now trading at trend resistance. This is telling you that the market is most likely going to be going higher, as it is leading the ES. The ES finally finds resistance as the yen finds resistance at strong resistance. At point 12, as the yen finds support, we have another successful long trade to point 13. As the yen finds resistance, so does the ES. And you have normal profit taking in both of the markets. As the yen is finding support at point 14, the ES is also finding its support, and it takes us to the next resistance zone at number 15. These two charts are from April 4th, and you can see the large major trend move that the yen made at this point, followed by the ES selling off at this point 11 points. Can you use a free Forex feed and the information in this video with a 15-minute bar chart and trade the ES? Sure you can. But you will not know where the yen is testing support and resistance, which will greatly decreases the chances of your winning trade. The same concepts of trend and profit taking apply to the yen. By having the eSignal Forex feed with ZoneTraderPro, you're increasing your odds for a winning trade. You should apply the same concepts that apply to the S&P to the yen carry trade charts.